Our next panel will cover modernization of the Community Reinvestment Act, and it will be moderated by Tatiana Gutierrez from Pretium. Tatiana?
Thank you so much to you and to the previous panelists. Welcome to the Community Reinvestment Act Modernization panel. We're scheduled for 1 hour, and I'm happy to introduce our panelists. David Dworkin needs no introduction, but he is the president and CEO of the National Housing Conference, the nation's oldest and broadest housing coalition. Prior to joining NAAHL, David was a senior policy advisor at Treasury, where he advised officials on matters related to housing and community development. Our second panelist is Anthony Weekly. Anthony is the Chief CRA and Community Development Officer at Truist, where he is responsible for collaborating with community development partners and regulators to help meet the needs of low to moderate income individuals in the Truist footprint. Lastly, but not least, is Buzz Roberts, the president and CEO of the National Association of Affordable Housing Lenders. Before joining NAAHL, Mr. Roberts was the director of the Office of Small Business, Community Development and Housing Policy at the U.S. Department of the Treasury. We will start the panel with a CRA 101, then move on to discussing the goals of CRA modernization and conclude with a forward look at New York's CRA adoption for non-bank lenders and how CRA connects with Build Back Better. We will encourage you to ask questions throughout the presentation into the chat box, and time permitting, we will aim to weave them into the panel discussion. So just to set the scene, and I'll direct this question towards David. David, can you provide us with some brief context of what the Community Reinvestment Act is and how it shapes housing initiatives?
Yes, and thank you so much for moderating this panel. Really appreciate Anthony Weekly, who I've known for almost 30 years, I guess, and worked on all kinds of housing issues with, and Buzz Roberts, who, among many other things, is my CRA sensei. I guess I'd also like to thank myself for asking me to be on the panel. This is my favorite subject, and it's a really incredible opportunity we have to modernize one of the most impactful and sustaining pieces of legislation in housing and community development. And when you think about it, when this legislation was enacted in 1977, we didn't have interstate banking, we didn't have mobile banking, we didn't have PCs. The whole nature of the industry was quite different, and the nature of our neighborhoods were quite different. And yet the statute itself is still as relevant today in many ways as it was then. And the statute has allowed us to modernize the regulations and to consider things now that we haven't considered before. And I think that's really encouraging. You don't often see that. The original CRA Act sought to address two specific things that were discussed extensively in the legislative history. In particular, one is to address the issue of redlining. And that was front and center. And they were particularly concerned about the way that redlining, a federal policy that was excruciatingly race-based, had impacted neighborhoods, and the need to help those geographies recover from the legacy of redlining. And the second thing was that it was meant to address specific disinvestment problems that were occurring at that time. And these involved the white flight that was occurring in cities as millions of people, mostly white, were moving out of increasingly diverse cities into the suburbs, greenfields in many cases. The major artery near where I grew up in Detroit, the city was called Southfield, and the the main artery was greenfield, and that was no mistake. My house was built on farmland, and we were seeing a lot of deposits being withdrawn from cities to fund the building of suburbs and suburban malls. And the people who were making those deposits weren't getting the benefit of them at all. And so those were the two main factors that were driving CRA. And the first is more as relevant today as it ever was. The second one, in some ways, has reversed itself. And the statute was written in a way that has allowed us to address the fact that a lot, not just people, but investment money has moved from cities into suburbs. And that fairness issue around deposits and investment occurring together is still operative and important. And so, we think about this in terms of geography and the importance there. We think about it in terms of people. And so now we have an opportunity to modernize CRA, really addressing some of the major changes that have been occurring. And that process has been underway for a while. I'll just note that the genesis of this most recent exercise in CRA modernization was in the first year of the Trump administration under Secretary Mnuchin. And in all the work around modernizing or amending the Dodd-Frank Act, and I'll note it's quite a testament to the drafting of Dodd-Frank that after 4 years of the Trump administration, 80% of Dodd-Frank was not only maintained, but many of the people who are regulated by it said, yeah, please don't change that. I don't like this, but for God's sakes, don't change that. We also began to look at CRA, and the direction from Secretary Mnuchin was, I want this to work. And so we commenced a year of one-on-one meetings with all kinds of people, including the folks on this call, to hear from them on what needs to be done to make CRA work better for people and for communities. That resulted in a memo that was sent to regulators. The regulators then, in looking at that memo, the OCC in particular, charged ahead, and initially with only the FDIC. The Federal Reserve Board is also one of the CRA regulators, and then came up with a regulation. Unfortunately, it largely ignored most of the feedback they got. The FDIC ultimately did not sign on to that regulation, neither did the Federal Reserve, and it was a final reg was put in place. But tangential to that, the Federal Reserve Board started a new process, starting with an advance notice of proposed rulemaking. Usually these are very general. And in the case of the Federal Reserve, it was much more specific. I really think of it as an NPR light. And they gave us a lot of things to think about. I considered this NPR or the ANPR, in a couple of categories. One is things we want to do, and we want to know if you think we're wrong. Things that we think we should do, but there's a couple other ways to do them. Let us know what's best. And in the last category, things that we'd like to do and we really don't know how to do it. And in that last category is the issue of racial equity. How do we better incorporate racial equity into CRA? And that's where a lot of the really interesting feedback has been coming in. And so as we go forward now, moving into the next phase, where the OCC has withdrawn or begun the process of formally withdrawing its final reg, and the three CRA negotiators are now working together to come up with a joint notice of proposed rulemaking. Which I hope we'll see early next year, that this process now can move forward to really get us where we need to be, and have a truly modernized, significantly improved Community Reinvestment Act. So that's kind of tee up on that.
Thank you, David. And before we move on to the meat of our panel, which is goals of modernization, just a couple of follow-up questions. How do you think CRA has succeeded since its inception? Kind of bring us up to where we are now. We know that there are, some big issues, but how would you describe the landscape up to now? Like what has CRA done for investment and lending to affordable housing?
Well, I'm really interested in what the other panelists think about this because they all approach it from a different perspective and are much more lender-centric. I would say that one of the most important things it's done is it's helped really encourage capital to support community development in ways that might not have been otherwise done. And it's also, as part of that, helped build and maintain a market for the low-income housing tax credit, which is the most impactful and effective support we have in the government for the building of affordable housing for low and moderate income families. And I will just note that Buzz Roberts doesn't like to be called the father of the LIHTC because he had a lot of company, but I will refer to him as the uncle of LIHTC. It's and has obviously been very involved in that ever since. The thing that I think we have, an opportunity to do here is to make it more responsive and more flexible without losing the benefit that it's had. And that's where I think we're going to spend a lot of our time today.
Thank you, David. I'll go ahead and give Buzz and Anthony a chance to add on anything.
Well, first, thanks to David and the National Housing Conference for this conference and for inviting me to participate today. It's much appreciated. And David is an old and valued colleague in our field, and really appreciate his personal leadership. I think NHC is in great shape today, in part because of David's leadership. I agree with David that CRA has really helped to drive community development capital. David mentioned the low-income housing credit, and what the first thing people think about there are the equity investments, insofar as banks provide about 85% of the investment capital for low-income housing credits. But I'd also add the debt side of those same deals, both in terms of construction finance and permanent mortgage debt. And we see many banks eager to participate in all aspects of that affordable housing work, and a wider range of community development work. We all know that affordable housing is critically important to communities, but so are economic development and other things as well that fit within the community development frame. And of course, home mortgage and small business lending. I would say there's still work to do on the homeownership and small business side, particularly as David referenced with respect to racial equity. It's said that what gets measured gets done. CRA does not measure racial equity. And if there were a tighter focus on that, I think we'd see a lot more of the industry responding to that motivation. So there's a lot that CRA has accomplished and more yet to do.
Thank you, Buzz. Anthony. Anthony, we can't hear you. I'm afraid we still can't hear you. Okay, we're going to give Anthony a minute and we will come back to you. You will not miss your opportunity to weigh in on the concluding the 101 portion. Well, thank you. Thank you so far. We are going to move on now about 15 minutes into the meat of the presentation, which is the goals of modernization. I know we've already started to speak about the goals of modernization. Are there, what would you say are the key areas that policymakers should consider when modernizing? I know we've started to talk about considerations of race. I don't know if anybody wants to take a deeper dive into that piece.
Sure, go ahead, Buzz.
Well, I was just going to say, at the risk of advertising, in a couple of weeks, we're going to have a webinar on what the data tell us about CRA and race. NAAHL commissioned Urban Institute to look at that. They've come up with some very interesting findings. They're going to be presenting that in a webinar on November 30th, so look out for that. I will say that NAAHL, which represents both banks as well as CDFIs, some housing finance agencies and others, did comment to the Fed that we thought it was time for CRA to directly address racial equity.
I would just add to that this issue of racial equity is really the genesis of CRA. In 1968, the Fair Housing Act was passed. The hope was that this bill, in making mortgage discrimination illegal, would successfully help increase Black homeownership and for people of color generally, and to really create an even playing field. By the time in 1975 that the Home Mortgage Disclosure Act data came out in 1976, it was clear that that had not happened. And so with that data, then they realized, so we've said what you can't do, let's say what you should do. And that was the beginning of CRA hearings, and I think now, as we are looking at the bill, on the other side of the Great Recession, we have Black homeownership rates that are just simply appalling, and are as low as they were in 1968 when mortgage discrimination was still legal. And so we have to come up with a way to better incent pushing deep into this space. And we have to be very deliberate and specific about it, because the discrimination was very deliberate and specific, and it had a real impact on generations of homeowners. And multi-generational home ownership is a major factor in contributing to first-time home ownership. So I think this is going to be a very important part of how we address these issues.
And David, is that going to occur then? Is the opportunity going to occur through the unified rulemaking process and the back and forth with the industry?
I think there are a lot of different things that are going to have to come together here. One of them is going to be CRA. Another is going to be down payment assistance, which is part of the Build Back Better bill. That's going to be important. It's $9.5 billion in down payment assistance, plus another $500 million in counseling. And I think that initiatives like NHC's Black Home Ownership Working Group, which we've turned into a Black Home Ownership Collaborative, made up of a wide range of organizations and over 100 stakeholders, is going to really push hard into the envelope. And all of these factors are going to have to work together. I think Anthony's audio may be back on.
Yes. Anthony, welcome.
Thank you. Apologies for the technical difficulties.
And we'd love to hear from you, Anthony, as we were concluding setting the stage for CRA 101. How do you think CRA has succeeded, and where do you think we still have to get to?
So first of all, I want to thank David and NHC for having this panel today. And there's not much I can say behind David and Buzz because they're the policy wonks. But I would say, I ditto exactly what they said. Without CRA, the capital wouldn't be there, the investments wouldn't be there, and it's a very measured approach when you look at the three-pronged approach from a CRA exam perspective on loans, investments, and services. If it wasn't for that focus, we would not be making progress from a CRA perspective. Now, with that said, there are some challenges, right? When you look at specifically home ownership rates for Caucasians, 74%, 72, 74%, all other minorities, 49%, and African Americans, 42%. There is a gap there, right? So I think CRA can focus on closing that gap, because the way most folks are going to grow their net worth and close that racial wealth gap is through either their 401k, but number one, home ownership. As long as that number is lagging, we're going to continue to have a racial wealth gap that's pretty significant.
And Anthony, where do you think there are spaces for banks to grow alongside a modern CRA? Like, how does CRA influence, for example, product development?
Well, when you look at CRA, if it wasn't for the measured approach and focus, I'm not sure if banks would have gotten as far as they've gotten with that, because I think over 80% of banks or financial services institutions get a satisfactory or higher, right? And so that focus has committed banks to move forward, and some of them the right thing to do. You look at it from a Truist perspective, it's innately tied to our purpose to inspire and build better lives and communities. But I think it's driven banks to be more focused on products and programs to meet their hurdles from a regulatory perspective on HMDA performance, on small business, small farm, on investments, and on services.
And Buzz, I'll up that, over to you as well from, your perspective. How have you seen CRA influencing product development in your member banks?
I think it's really been tremendous. So many of our member banks are achieving great things. Our members provide well over $100 billion in capital for affordable housing and community development every year through CRA. Now, some of that would happen in the normal course of business, but a lot of it wouldn't. And banks, particularly the larger banks, have developed a lot of internal expertise in how to get mortgages, small business loans, and community development financing done, often in partnership with government programs, with CDFIs, with community organizations. And it's really an interdisciplinary cross-sector approach that the banks have learned how to do. And banks bring so much to the table when they do this, and not just the money, but they bring their experience and market discipline to the process in ways that government programs alone sometimes just can't do. So it's really been a remarkable performance by the banks to get community reinvestment done. As we focus on the things that need to happen more going forward, let's not lose sight of the amazing work that's already underway.
Thank you. And I want to go back to a point that David touched on briefly at the beginning, how the final rule deals with geographies and branches, on top of racial equity. So performance, context mechanisms, how do we address geographic relevance? How do we preserve, the best of the OCC's rule? I'd like to throw that out. We can start with David.
Well, I think, when we think about branch banking, it's a very dynamic evolution that's occurring. What is the appropriate role of branches when we think about CRA? Where are branches making a difference? Geography is a critical part, but so many of our lenders are doing so much of their business online and through mobile banking. We should be cautious about assuming that everything is happening in a branch. Is the branch location serving the community and contributing to the community. In some cases, it's a very important part of the community. In other cases, you can walk into a branch and you see, 10 empty teller windows and 6 empty offices and a couple of, folks standing around greeting people, but it's not what it used to be. Is that really making a difference in the community or not? So I think we need to be really looking towards the future. Some banks, I'll just, single out JP Morgan Chase, have invested a lot of money in a branch expansion. Other banks have really put their money in ATMs, with depository ATMs and mobile banking. And I don't think we know yet which is going to be the answer. And so in this iteration of CRA, it's going to be important to maintain the flexibility necessary to allow the current reg to shift in the direction that becomes more apparent as these directions bear fruit or don't. And I think that the other factor that's important for us to keep in mind is that we need to remember that the CRA divisions of banks are in their own silo, that financial institutions, most large companies, are very siloed. And so when those of us are advocating for CRA really have to remember that people like Anthony Weekly are our allies in this. And we have to be sure that we're empowering them to make their case inside their financial institutions, because all of the silos are competing over a fixed amount of capital that's measured on a risk-weighted return. We want that. We want banks to be focused on a risk-weighted return because we want them to actually stay in business. We know what it looks like when they're not during the S&L crisis. Don't want to repeat that. So at the same time, if I'm pitching a market rate deal and Anthony's pitching a CRA deal, I'm going to have a higher rate of return. And we need something, and CRA is that something that's going to even the playing field. Otherwise, his 9-point rate of return and my 20 is going to turn him into a -11. And I don't think we should expect the person allocating capital, let's say it's Buzz, to pay for Anthony's success with his own bonus. And so that understanding of how banks operate is a really important piece of this.
Thank you, David. Buzz, Anthony?
Yeah, I'll go next. I'll go be in between David and Buzz on this one. And so David, at Truist, things are done from the top down, right? So we have a lot of support from Truist executives on CRA. You all know that we did a community benefits deal that was $60 billion, which we're delivering on. We're going into the last year of that, 2022. And so we get support from the top down because it's part of our purpose. I already told you what our purpose was: to inspire, build better lives and communities. But as it relates to CRA, I think CRA has to evolve as the market evolves. And we're in the midst of a digital evolution or revolution, right? And it changes CRA to some degree because it was based off of where your brick and mortar was, where your assessment areas are. We're outside those boundaries now. We need CRA to account for deposits, loans being done outside of the assessment areas so that those communities benefit from CRA.
I would just build on that point that Anthony makes and then pull it into the CRA policy itself. So when we think of the work that banks do outside their branch footprints, I think it's useful to look separately at the kind of basic lending activities for mortgages and small businesses, what sometimes is called retail activity. And for that matter, deposit taking in a virtual context as well. And also community development. Community development is quite different. I think one could argue that if a bank is making home mortgage loans outside its branch footprint, or what CRA calls local assessment areas, then it's fair to ask whether the banks are providing those mortgages equitably. With respect to community development, however, there's nothing comparable to compare the low and moderate income oriented community development activities with other community development activities, because community development by definition references low and moderate income benefit. And so there's not necessarily an obligation to do community development outside of the branch footprint. Clearly, there needs to be a primary responsibility for serving the branch footprint. But there ought to be lots of encouragement for banks that voluntarily do provide community development capital outside their branch footprints. So much now, the way the practice of community development happens operates through statewide, regional, even national intermediation. And the idea of CRA, the idea of the financial system generally is to help move capital to where it can be productively used. CRA has inadvertently hindered that sometimes by failing to recognize important community development activities outside of the bank's assessment areas, or sometimes the proximate region. So clarifying that and encouraging that, while still ensuring that the local assessment areas are being served appropriately, would unleash a lot of capital. We've all seen, for instance, in the low-income housing tax credit world, how pricing of tax credit investments varies according to whether that location is CRA rich or CRA poor. If there are a lot of capable banks in that market area, the competition is robust, and that's reflected in pricing. But in CRA underserved areas, sometimes called CRA deserts, there's still a big pricing differential. And I think that is the market telling policymakers how it's responding to the policy framework. So I think we need to update the policy framework so that rural communities and other underserved communities get their full access to CRA capital as well.
And thank you so much, Buzz, for bringing that up. And I'm gonna, I think, kind of go back to, the concept of let's not throw the baby out in the bathwater. Was there anything in the OCC rule that shouldn't be thrown out? I know, David started to bring this up at the beginning, that when the CRA was first passed, it was all brick and mortar, and now, we're in a new digital world. So David, I'll throw it back over to you, and hopefully, folks can address this issue of CRA, deserts. I know that I have also seen that, that folks want to be in the big metro areas or right outside, and, and then there are, there's lots of America that still needs investment in housing, especially areas that, just don't, they don't have as much social capital, they don't have as many, employers, as the big cities.
I think one of the things that we need to really improve on is, and that the OCC touched on, was embracing the idea that the geography isn't the end all and the be all. It's an important piece of this, but we need some additional flexibility as we look at geography and look at the impact we're having on communities and the people who we're trying to help. I think that one of the most likely areas to be incorporated into the new effort is going to be having a list of activities that get CRA credit to provide better clarity to lenders, to banks in their investments, to say, yes, I know this is getting credit. It's clearly spelled out. And I've got a list to say, these are the things to focus on. Now I know I can go to my examiner and say, well, what about this? And I need to get a consistent and clear response about that. But at the same time, I don't have to go over every single thing, and I don't have to guess what's going to count the most. And that list, while it's not going to be identical, obviously, to the OCC's list, we want to be careful that none of the items on the list contribute to displacement, but we definitely, that's going to help improve the clarity quite a bit.
Thank you, David. And we do have some questions in the chat. And so I just, a question came up. How does this address disparate impact to encourage building affordable housing in more affluent neighborhoods instead of just in poor neighborhoods which embrace segregation? And so, I think that we're starting to, there's CRA, and then there's, the SCOTUS concept of fair housing in terms of disparate impact that came from inclusive communities, which is I guess a new grounds for fair housing discrimination. And then there's also separately the affirmatively furthering fair housing rule, that HUD, that HUD has issued that applies to, organizations, private and public that receive HUD funds. And we also have some questions in the chat around NIMBYism and, how, and zoning and the difficulties, just of building, on top of all of the CRA issues. So I would like to, just put those out there so if folks can incorporate, any, because there's a lot of levels of policy issues around building housing in the United States, and especially building affordable housing, home ownership and rental. But I'd love to hear from Buzz and Anthony on, from Anthony on CRA deserts, and, what he's seeing in his day-to-day at Truist.
Yeah, NIMBYism is a real issue, right? Not my neighborhood, but, I think, it's up to the local municipalities, states, cities to correct NIMBYism, right? And that's going to continue to be a challenge, right? Because the perception is folks don't want perceived low to moderate individuals in their neighborhood is what it boils down to. And so I just think that's something that we have to work on in America culturally, right? That they're people just like you and me. They're human beings just like you and me, and also need the ability and afford the ability to have a safe and secure place to lay their head at night, right? CRA deserts, they're typically in urban markets where there are challenges, or even rural markets where it's less densely populated. That's something that we have to continue to work on. I'm not sure what the solution is to that. And so I'm going to defer to Buzz on that.
Well, there's a lot to unpack on this topic. One of the interesting things about the Supreme Court decision on disparate impact, while the court did affirm disparate impact as a policy standard, it declined to take sides on whether neighborhoods should be revitalized or opportunities should be opened in the suburbs. And I think we should try to avoid pitting two really important, valuable goals against each other. We're all on the same side here of affordable housing. We need to do both of those things. And in terms of CRA, I don't think we have to choose, because while in other federal and other government policies generally, we've got a scarcity mentality because in the case, for example, of subsidies, they are limited. And so choices have to be made about where and how they're deployed. That's not really the case for bank capital. Banks can do as much as they have the opportunity to do. What banks cannot do is finance a deal that does not exist. And so if you've got strong NIMBY opposition that prevents a deal from happening, there's not much that the banks can do about that. And so I think it's important that we apply more of an abundance mentality to CRA, and and generate more and more investable opportunities. I know that our member banks are looking for good investment opportunities. They want to do as much as they can. So I don't think there's a tension in this aspect, but there clearly are tensions in other elements of affordable housing development and preservation.
Yeah, but I guess
Thank
the
you.
greater question is, how do you eradicate CRA deserts, right?
Oh, that I think we can eradicate CRA deserts with better CRA policy. Right now, CRA policy actually restricts, not formally restricts where investments can go, but it restricts where CRA will recognize investments and loans. And that has had a chilling effect, because if you're a bank, maybe you're serving 100 assessment areas around the country. You may have 10, 20 metrics within each assessment area that you have to manage. If you're not going to get CRA credit for something because it doesn't fit in any of those boxes, you're probably not going to be able to prioritize that deal. But if your deal does generate CRA credit, well, that's a different matter entirely. And I think banks will respond to those motivations going forward as they have in the past.
Absolutely. And I just, I want to circle back on, I think originally, as David was saying, at the beginning of CRA, it was it was deposits in the deposits in the suburbs were moving into urban, or I'm saying that backwards, and now it's kind of switched. Can we speak to that part? Kind of like suburbs versus urban, not to I like Buzz's idea of an abundance mindset, but sometimes it can be helpful to dig down into the logistics of how we think currently that CRA is not supporting who it's meant to be supporting. And this is really, going to get into, would a new rule actually use race, explicitly, and what would those, I can imagine that, there would be some legal issues around that.
So let me start with that. I would say two things. One is that the markets have evolved a lot since 1977. And so I think of it really as 4 different groups: urban, suburban, ex-urban, and rural. And each of them have deep needs. And we want to make sure that we are taking advantage of CRA to meet those needs within the 4 corners of the law. On the issue of race, I think that it's essential that we are explicit about tracking the work we're doing. That's separate from whether we're making lending and investment decisions based on race. So at a minimum, we should be looking at where are we doing the lending and the investing, and account specifically for race and not just on income. The other is because otherwise we can't even know what we're talking about. And all companies are motivated by this. They track everything. And so if we're not tracking this, it's not important. The second thing I think we need to do is we need to look at better surrogates for race than low and moderate income. Now, in a perfect world, I would say, we need to amend ACOA so that it more accurately reflects its intent. That's the Equal Credit Opportunities Act. That's a whole nother ball of wax. But within ACOA, I think it is certainly realistic for us to look at, for instance, socially disadvantaged groups, which are disproportionately people of color, and address some of these things like that. It needs to be worded the right way, needs to be rolled out in the right way, but a lot of very smart lawyers have spent time thinking about how to do this, because I can tell you that, while I don't intend to speak for all white people, I'm not up late at night worrying about being discriminated against because I'm white. And I think so. We just need to look at the reality of what's occurred in this country and where the disadvantage is. And this is not about somebody else getting something that I should be getting. This is about all of us being able to get something that I already got. And are we going to actually make that available to everyone? I believe it's never too late to do that. And so, I'm grateful I was born on first base, but I didn't hit a single to get there.
If everyone's better off, everyone's better off. I think we had talked about that.
That's simple
before.
economics.
Yeah, and let's just realize how we got here, right? There was systematic and systemic, racism and redlining, and how do you correct that 100 years of that in the past? And so it's like, you're on the one. I'm a minority. I'm on the 1 yard line, right? And my counterpart is 1 yard away from a touchdown, right? And so how do you close that gap? And I think it's through race-based CRA. I mean, it's people say it creates an issue under the Equal Protection Clause, right? But there's so much disparity here. How do you make up for the past? It's a challenge, but I think we can do it.
It's that concept, Anthony, of it's not enough to not be racist, you have to be anti-racist.
That's right.
And that really fits CRA.
Go back to the home ownership piece. Okay, you're at 74%. Hey, I just want to get to 60, 65 in American better for minorities. Right?
And that's right. And let's look at disparate impact. Disparate impact is saying that, I'm responsible for, even though I'm trying, for having a significantly different impact from one racial group to another. And, I like to think about this as, if a child breaks a family heirloom that's sitting on a low table, oftentimes the first thing they'll say, Tatiana knows this, your kids are the perfect age for that, I didn't mean it. And they didn't mean it. But as a parent, I'm also responsible for putting breakable things where they can't get to them, and not putting it something important back on that same shelf. And so I think that when we look at the fact that, people involved today, they didn't mean it. If you're going to ignore it, in fact, you are taking on responsibility for not changing it. And so, we have to be honest about this and recognize that we can't just say, oh yeah, that's not happening or not my problem, because it is our problem.
And, and I think it will be a culture change, just in terms of when we talk about metrics and KPIs. I mean, aside from the very much larger culture change we're talking about, in terms of that, a lot of market rate and a lot of finance and, banks, they are very wary to collect demographic information and to start tracking these things in order to measure progress. But I think there is a lot more focus now, I think, on metrics and, demonstrable progress, that than there was before, and, and rightly so. We have about 11 minutes left. So I wanted to, make sure that there were a few more things that, that we discussed covering, minority borrowers programs, New York CRA for non-bank lenders, and also, rental housing. So I'll just, I don't know, Anthony, would you care to cover, minority borrowers programs at Truist?
Yeah, I mean, when I look at it, people often ask me, what do we need in order to close the wealth gap from a mortgage perspective, right? And you look at the products and programs. We have a 100% financing program. All you need is $500 of your own money. We have down payment assistance program, $7,500. You can layer down payment assistance programs. We have FHA, we have VA. And so when I look at the product set is there, it's the execution that's lacking, right? And what I mean by that is we got to do a better job, and even Truist has to do a better job marketing and outreach efforts, right? There's been some trust loss between, the market and banks because of the great crisis that we had. And we have to rebuild that trust. We have to let these people know that we're a safe harbor to do business with our outreach efforts, with our marketing, with our branding efforts. And I think all banks can do a better job of that, because when I look at the products and programs, they're out there, they exist. We also have to work with, the GSEs. When you look at Freddie and Fannie, 78% of their originations are to Caucasians, right? There's something wrong with that black box, right? And it needs to be opened up just a little bit in order for minority to participate a little bit more as far as access to credit. So banks have to do a better job of their marketing and outreach efforts to majority, minority, census tract, and minority individuals across the board.
Thank you, Anthony. Yes, and the trust is a big thing, and I think that there's a lot of that, and partnering with nonprofits and housing counselors, and eviction prevention, and think tanks, and all of that stuff. All the players now are coming to the table together, I think, which is really, really, really just fabulous, and very different from when I started practicing 20 years ago, when everybody was in their silos. But Buzz, I'd love to hear from you in terms of what you anticipate, or from everybody, with New York's new application of the New York CRA to non-bank lenders.
I think it's really
crystal ball.
Well, I think it's a really important development, because now something like 70% of home mortgages are made by lenders that are not banks, subject to CRA. And so it's going to be critically important that all lending is on a level playing field, really, and that not just the banks have an affirmative and continuing obligation to meet the credit needs of their entire communities, but other lenders that are taking great advantage of federal resources, whether it's the government-sponsored enterprises, or it's the Federal Housing Administration, or the Veterans Administration, or Veterans Affairs Department, or the USDA. There are lots of lenders who are taking advantage of these government programs, but they don't have the same kinds of obligations for community reinvestment banks have. So I certainly applaud New York State for moving in this direction. They're not the first, and hopefully they won't be the last.
I have a little different perspective on that. I think that it's important for us to keep in mind, whenever we're expanding regulations, to recognize that institutions, particularly financial institutions, have a regulatory burden budget. Compliance with CRA costs a lot of money, and I'd like to know what we're getting for that reg burden budget, and is it taking away from work they're otherwise doing in this space? One of the things we have to recognize with home lending in particular is that, as a result of overregulation, particularly through the False Claims Act, most of the large banks have withdrawn from the FHA market. That means less competition, and it disproportionately with institutions that are less regulated. And so, is that the intent? I don't think so. I think that's an unintended consequence. And I want to be careful that we're considering that, since non-bank lenders, they are not all lending where we want them to lend, or in necessarily equally, but they also make up a significantly disproportionate share of FHA loans. And that does overwhelmingly serve people of color. So I want to look at this holistically, and certainly not rush in on a federal level. States like New York, I'd like to see how that plays out. And if it's successful, I'm going to have a very open mind to it. And if it's not, I think we need to learn from that.
Yeah, and David, the unintended consequences are, for non-bank lenders, compliance for CRA is very, very expensive, right? And I'm not sure that they can, carry that cost burden. But it also means that those additional costs will be passed along to the client, which means higher interest rate and more fees, right? And so we just have to be very careful of how we do this. I'm not saying that they shouldn't participate in CRA. I just think we have to be very careful because right now, as Buzz said, there's 65 to 70% of the purchase market, right? They do a lot of FHA, and we all know FHA is 50% more minority.
And New York may be a very good petri dish to watch this play out.
That's right.
Massachusetts has not had a lot of problems with the similar kinds of obligations. And so I think, and it would also be much simpler for monoline mortgage lenders because CRA, with respect to banks, covers so many other areas. And so it would be a much simpler kind of straightforward process for mortgage lenders that are not banks.
That's a good point.
Were it to happen, I'm not holding my breath that Congress is about to amend CRA to pull in independent mortgage banks or SBA guaranteed lenders or anybody else.
We have 4 minutes left. I'd like to just, end with a tie-in between CRA and Build Back Better. So we'll just go around the room. David, any thoughts, predictions, concerns?
Well, as I think Diane mentioned earlier in the day, Build Back Better is the largest housing investment ever. If you're a houser, it is essential that we pass this, and it couldn't be less inflationary. I mean, when you look at housing price inflation, you're really talking about a lack of supply, and everything about Build Back Better is focused on supply in terms of the housing provisions. Not every dollar, but vast majority of them, and none of the other expenditures would be inflationary. So I think it's essential. I also think that when we look at expansion of the low-income housing tax credit, we look at down payment assistance, we look at the Neighborhood Homes Investment Act. These in particular are areas that are going to be tools that CRA lenders especially are going to embrace and really be able to use in making a bigger impact in their CRA investment.
Thank you, David. Buzz.
I just want to build on that last point about low-income housing credits. The House version of Build Back Better would have a substantial expansion of low-income housing credits. That's going to require the banking industry and other industries too to come to the table with more capital, both on the investment side and on the construction and permanent debt sides as well. So there will be a tremendous opportunity and need for particularly the banks who've always borne the primary responsibility for these kinds of financings to do more and to have more banks involved, not just the big guys like Truist who are already pulling a lot of weight here, but for many of the other banks that perhaps aren't doing as much as they can. They'll have an opportunity to do it. CRA is going to be very important to ensuring that they get recognized for that work. And I think that will be a really important part of making Build Back Better as efficient and impactful as we hope it will be.
Thank you, Buzz. And Anthony, we'll give you the last word.
Well, to add to what David and Buzz said, Build Back Better is definitely going to help the people that need to help the most, right? I just want to make sure that we all stack hands on making sure that those subsidies get out in a timely manner. A lot of the CARES Act subsidies and dollars are still unused, right? And we need to utilize these funds to help the people that need to help the most.
Thanks to everybody. That's our hour. Thank you, National Housing Conference, for putting this panel on. And David, I turn it over to you.
Thank you all so much. That was a great panel and really appreciate learning from all of you as I always do. We're going to be back in about 45 minutes or so when we will, in the meantime, we're going to hear from our sponsors. At 3:30, we'll be joined by Nan Roman for our panel on a new initiative to combat homelessness, House America, as well as Congresswoman Debbie Dingell and House Majority Whip James Clyburn. And if you have any doubt about how influential they are, Debbie had to record her segment last night because she's on Air Force One with the president today. And Majority Whip Clyburn is managing the House floor and really getting Build Back Better built and passed. And so he joined us earlier this morning, and we'll be showing that this afternoon. And he has a lot to say about the low-income housing tax credit and the other housing provisions of the bill. I know you're going to want to hear them. So thank you all, and I will see you back here soon.